market update. What the heck is going on in the marketplace? Big State of the Union speech last night. And what the heck can we do to make sure that we are serving the marketplace in a way that pays us really well? So the market update is going to be different today. And here's how it's going to be different. Keep the chats hopping. We're going to have a lot of fun. I'm going to be dialing your leads. Mainly, we have some follow-ups. But the market update is going to be different today, as in, yes, I'm still going to share with you the updates and what's happening right now in the Midwest, becoming a safe haven for investors. But I want to be a voice of reason. Because so many people I have found, I believe there's always been, Solomon said there's nothing new under the sun. There's always been right and left, and there's always been back and forth. But with AI and with everything happening, I've met a lot of my friends, a lot of people I've talked to who are giddy. They are so excited about the opportunities. And then I've talked to some people, especially people who work jobs, maybe in regular businesses and flows, and they are going, well, crap, it's a little scary. What's going to happen? And I get both of those thought processes, and I agree. The unknown always allows room for fear or concern. And that makes sense. Be cautious, be vigilant for sure. But I want to be a voice of reason for a moment. I share, and I want to explain this very importantly. Those of you who have been around, you come hang out with us at the live events, and you hear me give this frame of thought, but it's so important for my Truka crew that you guys are in this frame of thought. And that is realizing every headline you read is written that way for a reason. It's to get a certain reaction. And I thought it was so interesting last night. I was on a meeting, and so I didn't get to see the first part of the State of the Union address. I seen the last part. And I catch up because I thought, I wonder if there's some things in there about real estate. There might be some stuff affecting real estate investors. I'm going to catch up on what's going on. And I start looking at news reports online. And one of the first news reports I see is Republicans cheer at Trump kicking 2.4 million people off of SNAP benefits. And I was like, what an interesting headline. Now, regardless of whether you're Republican or Democrat, it wouldn't be smart for anybody to cheer about someone kicking people off SNAP benefits. Who here realizes that's probably not what happened? It was a reframe of what happened. Now, regardless of whether you agree with Trump or you don't, you start to understand that what actually happened. So I go back and I look and I'm going, where'd this come from? Trump says we have lifted 2.4 million people off of SNAP, which in my translation says because of rising wages for the first time in many years, several people no longer need the benefits. Now, whether you agree or don't agree, the frame is much different. And I share this because what you are seeing is you are seeing two camps of people right now. You're seeing people who go, oh, crap, AI is changing everything. Jobs are going to be out of. What are we going to do? A bunch of people are going to be out of jobs. What if the sky is falling? It's the same people that have been waiting for the last decade for real estate prices to tank. It's the same people that are selling fear 24/7. And then you have people that say, you know what? $84 trillion is going to change hands over the next 20 years. There is 10,000 people a day turning 65 plus. There is 10,000 people a day crossing that barrier. You start to look at those stats and you go, wait a second. There's a whole bunch of people who are looking to hand over businesses, sell houses. There is a transfer of wealth that's happening. So where does that put us? That puts us who are playing the game regardless of age, whether we're 30s, 40s, 50s, 60s, 70s, doesn't matter. We get to have an opportunity to help people who are looking to sell their properties, people who inherited properties. We get to step into that transfer of wealth. It's happening in a big way right now. So AI speeds that up. What do I mean by that? AI speeds that up because what happens as you're watching in front of your eyes, AI change everything, changing a lot of the workforce in very short order. Yes, there probably will be substantial unemployment, but you know what else there'll be? Substantial opportunity. And so I want to paint the picture for a moment and be, as I said, that voice of reason. We're going to dive in and we're going to be calling some live sellers because I want to negotiate deals live. And I want to talk to you about something that's very important today. I think it's going to be very helpful, framing us up for 2026 ahead. Who here, I got to see from my YouTube crew, I know all my Zoom crew, you're part of the Truka crew. For all of my people on YouTube, if this is your first time joining us on the live stream, just put a 1. If you've been here before, put a 2. I want to see who we got on the YouTube live stream because we got a good crew watching over there. And thank you for being here. So while those chats are coming in, a 1 if this is your first time watching the live stream, and a 2 if you've been here before, I want to point out that the Midwest markets is shifting big time. I want to point out a couple of data points. Now, this is not obviously to do with the Midwest markets, but 23% of searches for homes for sale in Vegas are originated in California, meaning 23% of people searching to buy houses in Vegas right now are people sitting in California when they're searching that up. Very interesting note. Now, why do I share that? All right, what's up, crew? We got Just Me NC is first time. Welcome. We got Israel, first time. Welcome. Welcome back, Clay. Carl's first time. Welcome in. Good to see you. Keep them coming. So as you're looking at this transfer of wealth that's happening right now, what I've been talking about that has been happening and is still happening in a big way is that the Midwest, I call it the Midwest Gold Rush. You guys who have been around have heard me preaching about this for the last 2 years, that Midwest is where you want to be. Why? Prices are continuing to elevate. Why? Because people are still looking for affordable houses. And there's $1.3 trillion of credit card debt. So yes, I'm not saying there's not some economic challenges ahead, but what I am saying is the doomers are selling you fear and they're getting it wrong. The Midwest Gold Rush, the Midwest provides opportunities for incredible amounts of gathering wealth, buying properties, Indiana, Kentucky, Ohio, where houses are still affordable, where in the West Coast, they're getting pushed out a lot of times. So for each of you, being able to structure this, you can do this business from anywhere you have an internet connection, being able to position yourself in the markets that you know are what I call, type it in the chat, emerging markets. Emerging markets. Something else that's happening is, as the news article on your screen, thank you, Stephanie, the news article that's on your screen right now, it references Peoria, Illinois. It references Fort Wayne, Indiana, Pittsburgh, Pennsylvania, South Bend, Indiana, Davenport, Iowa, Rockford, Illinois, Wichita, Kansas. It mentions Toledo, Ohio, Lansing, Michigan, Wichita Falls, Texas. And it talks about the continued increase in pricing that is happening there. But it's not crazy pricing that's driving people out of the market. It is being a safe haven for people who want reasonable prices. Now, here's a quick note, quick data. And those of you who've been here before, normally I am just almost data dumping on you at this point in the first 10 minutes of the live stream. And so I wanted to do a little bit different today, and we'll be back to the data dump next week. But 40% of people are worried about a market crash right now. According to Clever Offers survey, 55%, though, believe prices will rise in 2026. 73% say it's a good time to buy, and 72% say it's a good time to sell. Now, I think that's a very interesting stat because what happens is people of wealth run in when others run out. And right now, there is a lot of fear being sold in the marketplace. All right, so back to Midwest Gold Rush. Back to what is happening in the market for you right now before we get to these live dials. I want to drive home the point that if you are looking to buy houses and looking to invest in real estate, I love the markets. Shout out to Joe and Judith. I heard they just closed 2 more deals yesterday. Shout out to Valerie. I think you got a deal closing here shortly. Shout out to Kay. So good to see you. We had a great chat yesterday. Kay just done a Buffalo deal in Oakland City, Indiana. And so many more of you. Steve, I know, has multiple deals in progress. I don't know if there's any under contract right now in the Midwest, but you guys are crushing it in the Midwest, and they're easy price points. We're still getting houses for $100, $150, $200, $250,000. And you are still getting houses that actually can make cash flow, not big cash flow, but some cash flow with lease options, with rents being higher than the payment going out. A lot of tired landlords are out there talking about exactly that, being tired landlords. You just can't make money in real estate no more. There is no cash flow left in real estate. And so when what used to work ain't working no more, what do? Do we get mad and quit playing the game and determine it's destined for us to be broke? No, we change the way we're playing the game. So this is the perspective I want to give you guys as a voice of reason in crazy times. Is it's time to change the way we're playing the game. Yes, buy owner finance, sell lease option. Yes, buy in the Midwest, even if you're on the West Coast or the East Coast or somewhere in between. Yes, you can do this in Texas and Florida and everywhere in between, and California too. But I like markets that I'm most likely positioned for success. Somebody come to me and said, well, Andrew, I live in California and I have a lot of connections out here. Can I do this business here? I said, yes. And if I told you, hey, you can do it in a market where you're likely to do 1 to 4 deals a year, and I don't know how many months it will be, depending on how new you are, before you get your first deal, maybe longer. Or you could go to a Midwest market where you're more likely to do higher volume, even though the profit centers might not be as big, but you are more likely to get a deal much sooner. Which would you prefer? Well, if you're new, my gosh, you probably want a deal much sooner. I know I did when I started. And so set yourself up for success. Choose markets that are emerging. Choose Midwest markets. AI is shifting everything. And here's something else I have not heard a lot of people talking about. And I know there was February 20th, I believe it was, the news report came out talking about institutional investors or those who own more than 100 properties based on the executive order President Trump signed banning institutional investors. Something that I want to point out for you guys is with the shift, an AI shift, I believe this started back in COVID, but you guys heard of Zoom cities back in COVID. In other words, people were leaving some of the bigger cities because they didn't have to go to the office no more, and they were buying in smaller markets where they could do their meetings from virtually. And I share this because I believe as AI shifts how people are going, yes, places like San Francisco, right, the Bay Area, that may get hit hard as people move out, or other places where there's tech heavy going on. But generally speaking, in the Midwest, where cost of living is much lower, I was just talking to one of my California realtor friends out here, and he was telling me people are selling, several of clients he's working with that are selling their houses to buy in Michigan. Like, number one, not quite sure why you want to leave SoCal to go to Michigan. But secondly, I get it, because they're selling a house out here. They're getting a nicer house there, and they're paying 20% of the price. I get it. So they're taking money and investing it. They lived out here for many years, and they've had incredible appreciation. All right, so that sunshine tax just got a little too expensive, I guess. So we're in an exciting time. The market, yes, it's shifting. It always does. And most people get stuck in a loop. And I'm not promoting Bitcoin. I'm not a crypto pro. I have been doing real estate for years, and that's what I put all of my effort and energy into. But I notice it in short order with crypto. I see Bitcoin going up. People get excited. They buy. I see it, as it recently did, took a little downturn. Now, if I said to you, hey, there's this asset that's worth $300,000, you can pick it up for $60,000, who's in? Give me a yes in the chat. Who's in? $300,000 asset for 60 grand. Yes, you're in. Going, crap, I can get some money there. Now, I'm not suggesting that you should go out and borrow money against your house to go buy crypto at all. I'm just making a point. That is a no-brainer opportunity. I've been buying crypto a little bit. What I am okay with losing, I might add. Not big time. So why? Because I don't fully understand crypto. I mean, I have my head wrapped around it. I study it. I geek out on it sometimes, but real estate's my jam. And so understanding, I see the yeses coming in. Heck yeah. So understanding that, hey, probably right now, over time, Bitcoin will continue to rise. It's probably at a big discount. So it's probably a smart time to buy. But what do most people do? I call it emotional investing. Crap, the market's going up. Got to get in. Oh, crap, it's going down. I got to get out. Crap, why do I always lose money investing? Well, it's going up again. Let me get in. Well, crap, it's going down. I got to get out. And people follow that loop so many times. That's what the stock market does. That's what so many places, that's what happens. And so I challenge you, think different, be different, run in when others run out. When stuff starts tanking, I go, well, crap, I guess I got to buy some more. When it starts going up, I go, well, should I pause or should I keep buying? Because I don't plan on selling. I plan on holding. And so if you look at the game and understand the way it's played, your whole world will begin to operate differently. And that's what I want for you guys. All right.